Hello, everybody, and welcome to my monthly Vietnam update. In June, the VN index was buoyed by strong economic data, despite lingering concerns over US trade negotiations and heightened geopolitical tensions from the Israel Iran conflict. The Vietnamese benchmark index reached its highest level in 3 years, closing the month at 1,376.07 points, representing a 3.1% increase in US dollar terms. During the same period, the AFC Vietnam Fund continued to rebound from its April lows, which were driven by tariff related market shocks. The fund's NAV rose by 6.5%, significantly outperforming the VN index for the month. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you.
Imagine this. A country gets hit with a sudden, massive tariff threat, like 46% from a major partner. You'd expect panic, right?
Yeah.
An economic nosedive.
Definitely. That's the textbook reaction.
But what if that country not only weathered the storm, but actually surged, hit new highs, and kicked off this deep, fundamental transformation?
That's a much more interesting story.
Well, that's the story of Vietnam right now. It's way more compelling than those initial scary headlines, and that's exactly what we're going to dive into today. So our mission here is to really unpack what's really going on with Vietnam's economy. We want to look past that tariff scare and, understand the foundational shifts driving things.
Right.
We've pulled together market reports, economic analyses, government documents, trying to get a full picture.
And it is a complex picture. What's happening in Vietnam, it's genuinely multifaceted. It's this mix of immediate market strength, really solid macroeconomics, and this profound long-term policy change.
It feels different somehow.
It does. Frankly, it's maybe even unprecedented how quickly they're navigating all this, especially, compared to how other economies might just buckle under that kind of external pressure. Their response, their internal strength, it feels unique.
Okay, let's unpack that resilience then. We have to start with that tariff shock. Early April 2025, President Trump drops this bombshell 46% tariff on Vietnamese goods.
Yeah, that caused some ripples.
I remember thinking, oof, this is going to hurt. But then, just days later, he postpones it. Talk about whiplash.
Right. Chaos seemed inevitable.
But what actually happened in the market? Did it just tank?
Well, it did react sharply at first, as you'd expect. But then the rebound was surprisingly fast. Investor confidence, it sort of crept back in, liquidity picked up significantly.
MVN index?
It roared back, hit its highest level in 3 years.
Wow, okay, so not just recovery, but a real rally. What fueled that? Was it just the big players?
That's the interesting thing. No, it was really a combination. Strong economic fundamentals, for sure, but also this huge surge in new investors getting into the market.
New investors, like everyday people.
Exactly. We have data from the Vietnam Securities Depository, the VSD.
Yeah.
They track all the trading accounts.
Yeah.
The total number just hit 10 million accounts.
10 million. How much is that relative to the population?
That's basically 10% of the entire country's population with a stock trading account now.
10%. That is a notable influx. So these new investors, they provided critical momentum for the index.
Absolutely. Their enthusiasm was a key driver.
Does that kind of rapid retail participation bring any risks? Maybe less experienced investors jumping in?
That's always a fair point.
Yeah.
A rapid expansion can increase volatility. But I think what helps mitigate that risk here is that it's happening against a backdrop of genuinely strong economic fundamentals. It's not just hype.
Okay, that makes sense. So
Yeah.
the market bounced back strong. But what about the bigger picture? Those fundamentals you mentioned, what does the macro economy look like?
It looks incredibly strong, actually. And that's really supporting the market sentiment. Vice Prime Minister Nguyen Hoa Binh just came out saying they expect Q2 GDP growth to hit 7.6%.
7.6% in this global climate.
Yep, that puts Vietnam right up there among the fastest growing economies in the world. And, the government's ambitious target for the whole year is 8%, and that still looks like it's within reach.
That is remarkable. So what about foreign investment? Did the tariff scare put a dent in that? You'd think companies might get nervous.
You might think so, but the numbers tell a different story. Registered FDI, foreign direct investment, actually exceeded $20 billion by the end of June.
20 billion registered, and how much actually flowed in?
Even better, the disbursement the money actually spent rose 11% to over 12 billion US dollars.
So despite the tariff noise, the long-term money kept coming.
Exactly. It's seen as a key long-term growth driver. It signals that international investors, the big multinationals, they still have real confidence in Vietnam's potential, regardless of, short-term policy jitters from the U.S.
Okay, strong macro, strong FDI. How's that filtering down to companies on the ground? Are we seeing it in earnings?
We are. The expectation for Q2 2025 earnings is really strong. Growth over 20% across lots of listed companies, particularly in banking, public investment projects, and manufacturing.
Can you give us an example? Make it a bit more concrete.
Sure. Take Lam Dong Minerals and Construction Materials, LBM. It happens to be the AFC Vietnam Fund's biggest holding.
Okay.
They're expecting to double their Q2 earnings. Double. And they think they'll hit their entire full-year profit target within just the first 6 months.
Wow. And their stock price?
Up 5.5% in June alone.
So what's driving LBM's success specifically?
Well, according to their CEO, it's directly tied to this big surge we're seeing in public infrastructure spending, especially new highways.
Infrastructure. Always key.
And this ties into something even bigger, a major government shift. They've got this new master plan for provincial restructuring.
Restructuring provinces. What does that involve?
It's a pretty big deal. The National Assembly decided just back in June 12th, to cut the number of provinces from 63 down to 34.
63 down to 34. That's significant consolidation.
It is. And for LBM, their home province, Lam Dong, is merging with Dak Nong and Binh Thuan, this new merged province. It'll be the largest in Vietnam by area.
Vietnam's biggest province.
Okay.
And the connection to LBM.
Just connecting that huge new area is going to require, they estimate, 2 or 3 new highways, minimum. So LBM being a construction materials supplier right there, they're perfectly positioned. It's a direct long-term boost for them.
And you can see how that plays out nationwide, right, if they're merging provinces all over.
Exactly. You're going to see similar massive infrastructure needs popping up across all these other newly merged larger provinces. We're basically looking at the start of a nationwide construction boom for the next, say, 5 to 10 years. It's colossal.
This infrastructure push sounds transformative, but you mentioned earlier there's an even deeper shift, something maybe being overlooked because of all the tariff drama.
Yes. And this is maybe the most profound piece. It's this fundamental transformation being driven by something called Resolution 68.
Resolution 68. What is that exactly?
Yeah. Our firm's lead strategist actually calls it a true economic liberation. In essence, it's a historic policy shift. It formally places the private sector right at the center of national growth.
Haven't we heard similar things before, though? Policies aiming to boost the private sector.
We have. But what feels different this time, what's critical, is that this isn't just rhetoric. Resolution 68 seems to have real teeth, real momentum behind it. It's not just about cutting red tape. It seems to be about genuinely shifting power, guaranteeing private companies access to capital and, crucially, access to major projects that used to be purely state-run.
Okay, that does sound like a bigger deal. Is there a prime example of this in action?
The most stunning example, I think, is the proposed north-south high-speed railway. We're talking a potential $67 billion US project.
67 billion. Massive.
And for the first time ever, this kind of huge national infrastructure project might actually be built primarily by private Vietnamese companies.
Private companies building a national high-speed rail, how are they tackling something that huge?
Well, it's really a game changer. It signals just how serious this private sector commitment is and how Resolution 68 is being implemented even this early. 2 of the biggest conglomerates, Ving Group through a subsidiary called Vinspeed and Thaco Group, have both formally submitted really ambitious proposals.
Ving Group and Thaco. Okay.
And both are putting serious skin in the game, committing significant equity, 20% each. That shows they're not just talking.
How do their plans differ?
Quite a bit, actually. Ving Group's Vinspeed is proposing a faster build, like 5 years, and asking the government to finance 80% of it at 0 interest. They're also projecting ticket prices at 60-something% of airfares.
Okay, heavy government financing there. What about Thaco?
Thaco's approach is different. They're looking to raise financing from domestic and international lenders, but with government guarantees. So more market-driven financing. Their timeline is a bit longer, ticket prices subject to government approval, and notably, they're bringing in international tech partners, German, French, Japanese, South Korean firms.
Interesting. And they're doing something else too, right?
Yes, Thaco's proposal also includes a transit-oriented development model, or TOD. That basically means building communities and urban areas around the transit hubs to encourage sustainable growth. It's a more integrated approach.
So these aren't just railway bids, they're really statements about this new era, this Resolution 68 in practice.
Exactly. It signals a massive shift. But, I mean, a project this size?
Mm-hmm.
What are the big hurdles for these private companies securing all that money? The regulations.
Those are definitely the key challenges, securing the rest of the financing, especially for Vingroup's model needing government funds. That's huge. And then navigating land acquisition permits across all those provinces. It's complex.
Yeah.
But the very fact they're putting forward such detailed bids, it speaks volumes about their confidence in this new environment under Resolution 68, doesn't it?
It really does. They seem to believe the government is serious this time.
So with all this happening, market resilience, macro strength, private sector empowerment, what does it mean for Vietnam's stability long term and its finances? Let's look at the state budget.
Yes. And this is another area of, frankly, remarkable improvement. For decades, I mean, going back to the 1990s, Vietnam consistently ran budget deficits. It was just the norm.
Right.
But that's changed. In both 2024 and 2025, the country has actually generated budget surpluses.
So surpluses, how significant?
Pretty significant. There's a sense that the leadership, particularly General Secretary De Lam, has really embraced this more open but also disciplined economic approach. Big focus on boosting state revenue.
Do we have the numbers on those surpluses?
We do. In 2024, the surplus was about 207 trillion Vietnamese dong. So that's roughly $8 billion US.
$8 billion surplus. Okay.
And it got even better in early 2025. In just the first 5 months, the surplus hit 306 trillion dong. That's around $12 billion US.
$12 billion in 5 months. That's a very strong fiscal position.
Exactly. And having that kind of fiscal strength is precisely what allows the government to even consider backing massive initiatives like that $67 billion high-speed railway we talked about. It gives them options.
So this fiscal health, combined with everything else, it makes the tariff issue seem less like an existential threat.
I think that's fair. The concerns about U.S. tariffs are valid, right? They could slow growth temporarily, no doubt, but derail the entire economy. Probably not.
Why not?
Because Vietnam's played the long game. They've built really deep trade relationships over 10 strategic comprehensive partners. Plus, they have free trade agreements with major blocs, the EU via EVFTA, the UK via UKVFTA, BRICS, the CPTPP countries.
So diversification is key.
Absolutely. If they lose some exports to the U.S. because of tariffs, they have other channels, other major markets they can gradually pivot towards to offset those losses. It gives them resilience.
It all comes back to that idea you mentioned earlier, economic liberation.
Yes, that's how our strategist frames it. For years, private companies were the engine of output, but they didn't always have the full institutional backing, the access, the legal framework to reach their absolute full potential.
And Resolution 68 changes that.
That's the goal. It seems to be creating the legal structure, the financial pathways, and maybe most importantly, the political will to really unleash that private sector dynamism.
And if they pull this off, if this transformation really takes hold, what's the potential impact?
The potential is huge. If Resolution 68 is implemented effectively, you could see Vietnam's GDP growth potentially hitting 7%, maybe even higher, consistently over the next decade.
So it's not just about growing anymore, it's about fundamentally changing how they grow.
Exactly. It feels like a genuine transformation of the economic engine itself.
Okay, so let's try and wrap this up. Key takeaways for you, the listener. First, Vietnam showed this incredible ability to bounce back from that external tariff shock.
Resilience.
Underneath that, you have really strong macroeconomic fundamentals and this surge in investor confidence, including lots of new retail investors.
All right, the 10 million accounts.
We're seeing tangible impacts on the ground from big infrastructure projects like with LBM, driven partly by that provincial restructuring.
Yeah, the construction boom is real.
And maybe the biggest takeaway, this profound underlying shift. Resolution 68, putting the private sector truly in the driver's seat, aiming for that economic liberation.
I think that's the core of it. And this whole journey Vietnam is on right now, it really is quite unique. It's definitely a case study worth watching closely because